NIO stock closed Wednesday session lower, finishing the day at $6.34 per share, down about 38 cents or roughly 5.3%. On the surface, that sounds like a rough day. But in reality, this move looks much more like a healthy pullback after a week of explosive gains than it does a reversal of momentum. To put things in perspective, let's rewind. Just last Friday, NIO surged nearly 15% in a single day, blasting through the $6 mark and closing at $6.34. That capped a week where the stock finally broke out above the stubborn $5 resistance level and held it for 4 consecutive sessions, something it hadn't managed in over half a year. Then on Monday, after briefly touching $6.70 intraday, profit-taking pulled the stock back under $6 into the close. But Tuesday changed the narrative again. The stock ripped higher by 10%, closing at $6.70 on heavy volume. So coming into Wednesday, NIO was already sitting on a massive run. In just a handful of sessions, the stock had climbed from under $5 to almost $7, a gain of nearly 40%. After that kind of move, a 5% pullback is not unusual. In fact, it's a sign of normal market behavior. Traders who bought early cash out, momentum cools, and the stock consolidates its gains. There were also some specific narratives that weighed on sentiment today. Morgan Stanley flagged concerns around the Onvo L90's production ramp, noting uncertainty about whether NIO can hit its ambitious delivery targets. Some investors also worried that the company, still unprofitable, might take advantage of its rising share price to raise fresh capital. Those headlines tapped into long-standing concerns about execution and dilution risk. Add in a generally softer tone in broader markets, and it's no surprise the stock gave back some ground. But here's the key, NIO still closed well above the $6 mark. That matters. In technical terms, $6 is shaping up as the new floor. Monday proved that the stock could hold there despite profit-taking. Tuesday proved that it could rally hard from that level. And Wednesday, even with the decline, confirmed that buyers are still willing to step in and defend that support. This is what healthy consolidation looks like. Stocks don't move in straight lines. After sharp rallies, they need time to digest gains, shake out weak hands, and set up for the next move. The important thing is whether they maintain higher lows and stronger support levels. For NIO, that's exactly what's happening. The underlying story that fueled last week's breakout hasn't changed. Jerome Powell's dovish tone at the Jackson Hole Symposium shifted the macro backdrop in favor of growth stocks. Lower rates make long-term EV investments more attractive, and that's a tailwind that isn't going away. On the product front, NIO's updated ES8 SUV remains a strong entry in the premium segment, priced to compete with Tesla's Model Y under its battery-as-a-service plan. The Onvo L90 mass-market SUV still has analysts buzzing, with projections of 10,000 monthly sales by the fourth quarter. If those forecasts prove accurate, it would be a game-changer for NIO's delivery volumes. What today's pullback really reflects is not a collapse in those stories, but the natural ebb and flow of trading. Think about it. In less than a week, NIO went from a stock investors had written off to one of the hottest movers on the board. That kind of shift inevitably attracts both speculators and skeptics. Some traders are looking to cash in quick gains. Some shorts are betting the move won't last. The result is volatility. But volatility, in the context of a stock establishing a higher base, is constructive. So what should investors be watching in the sessions ahead? First, the $6 support level remains critical. As long as NIO holds above it, the breakout narrative remains intact. If it slips below, then $5.50 becomes the next level to watch. On the upside, $6.50 and $7 are the targets. We saw intraday attempts to test those levels this week, and another run at them is possible if volume stays strong. Second, delivery data and product updates will be increasingly important. Investors want confirmation that ES8 orders are gaining traction and that the Onvo L90 ramp is on track. If NIO provides positive commentary on either front, it could be the catalyst that pushes the stock decisively through 7. Third, the macro backdrop remains a key driver. The expectation of a September rate cut is still buoying growth stocks, but any surprises in upcoming inflation data or Fed commentary could change the mood quickly. For a company like NIO, which relies heavily on investor confidence in its growth trajectory, macro shocks matter. At the same time, it's worth noting that competition remains fierce. Tesla is still cutting prices and expanding production. BYD continues to dominate the Chinese market with unmatched scale. XPeng and Li Auto are also pushing aggressively into NIO segments. But what NIO has that sets it apart is its battery swap infrastructure, its brand positioning in the premium space, and now, a credible mass-market push with the Onvo brand. That differentiation is why analysts are starting to look at NIO more positively again. So let's frame today's action in simple terms. Yes, NIO dropped 5%. But that came after a nearly 40% rally in less than a week. Viewed in that context, today's move looks less like a problem and more like a pause. It's the kind of pullback that refreshes a rally, cools off overheated sentiment, and sets the stage for the next leg higher. For traders, this is a time to watch volume and key levels closely. For long-term investors, it's a reminder that volatility is part of the game with NIO, but the long-term potential remains tied to its ability to grow deliveries, improve margins, and eventually turn profitable. The seeds for that are there. The ES8 and the Onvo L90 are real products with real demand potential. The Fed's shift toward lower rates adds macro support. And the technical picture has improved dramatically. So the bottom line is this: Wednesday's decline wasn't a breakdown, it was a healthy pullback. NIO is still above $6, still building on its breakout, and still one of the most compelling EV stories in the market right now. The real question isn't whether today's dip matters. The real question is whether NIO can use this consolidation as a launchpad for its next push towards $7 and beyond.